too. And there's quite a few news, some big ones that were quite worrying. But today, what I wanted to do, I wanted to concentrate a little bit on the macro outlook that we have for the next few months, because I have a lot of people that ask me, is it the right time to buy now? Will the market start picking up again? We do, for that, we do have a look at what's going on in the world generally, at least in economic terms, but also there are some leading indicators and some lagging indicators. So sometimes there are some things that kind of point the way to how things will be going in the next few months, and we'll be looking at those. And also be talking about the latest worrying hack that happened this time on the Binance Smart Chain, which is something that a lot of you are familiar with, and there are, many projects that we take part on in there. And it is, again, I think it is worrying, because these are things that are beyond your personal security, because the hacks that are happening at protocol level. And it just it's important. So it's something that I wanted to again reiterate, is that we still are in a very early stage industry, okay, where these things can happen, where funds can go missing, even if you've done all the right things. So please, the first thing I say to everybody that wants to invest in this or in other kind of early stage investment or industry, is that please bear in mind, don't put your mortgage money on it, the money that you need to live on to pay your rent. Make sure that you allocate your funds properly, and you make sure that the funds that you are investing are part of your investment pot, and something that, although it would hurt, that it wouldn't ruin you if things were to go wrong, as they have done in quite a few occasions this year. Okay, let me start sharing my screen and start talking about a few things. Okay, can you see my screen? Yeah, good. Okay. Again, start from the economic calendar, and this is kind of obviously the short term, just what's happening this week. And this week, everybody's been waiting for the non-farm payroll, kind of like the new jobs that have been added to the American economy, excluding farming and government jobs. But apart from that, we can see that there have been a couple of news in Australia and New Zealand, where they had new increased interest rates. So in Australia, actually, was a bit less than expected, but quarter of a point, right, and a half point was expected. New Zealand was exactly as predicted, so went up by half a point. So it just following the trend that we've seen all over the world, where basically, where there was a monetary expansion during COVID to make sure that everybody had some way of going through the crisis. Now there is a monetary restriction, kind of like trying to control the effects of the previous policy that was expansion. So the previous policy caused massive inflation, as we all experience all over, wherever you are in the world. The inflation, things cost more in the shops, and inflation is being trying to control it by very crude measures, as we could describe it maybe, which is raising interest rates, raising the cost of money. And so that kind of like it's generally lately the US has been leading the way with kind of being the first to increase rates, and then everybody else is following suit. So the UK, the Eurozone, Australia, New Zealand, and so on. We've seen interest rates going up across the world. The biggest news of this week, as I say, it's this announcement that will come in a few hours, which is the non-farm employment change. And this is, if you have ever traded at a stock stock and shares, forex, or anything else that's traded on a daily basis, you know that this is a big announcement, and then things really slow down in trading volumes before the announcement, and then pick up after that, because nobody wants to be caught on the wrong side of a very expensive trade. Okay, because these announcements have a history of really moving the markets very, very fast. Okay, and obviously, if you just are one of those that wants to trade the news, just bear in mind that there are people that invest millions of dollars to get systems to get the news, like just a few fractions of a second before anybody else. So you always play second fiddle if that's your strategy. So this is what it's like. If you're interested, and if you're in the market, just keep an eye for these announcements, and have a look at least as a student, have a look at what happens in the markets when you're before, during, and straight after the announcement. So if you just look at the markets for about half an hour when this announcement happens, you'll get an idea of how this affects the markets in general. Now, as the general outlook, and we look at a few charts now, and then we look onto the macroeconomic picture. So this is again what we've been talking about for a while. This is the dollar index, so indicates the strength of the dollar against a basket of other currencies, and you can see especially the Western economies. So as you can see, we've been in a kind of like in an uptrend ever since May of last year. And this is a very long-term chart, by the way. This is a weekly chart, so each candle represents 1 week in time. And as you can see, as we've been telling you a few times, we are now getting close to levels that we haven't seen since the early 2000s. Okay, we can see this peak here that was kind of like represents really the dot-com boom, and also the all the worry around the year 2000, in case it was told that all computers might stop working, etc., etc. Okay, so and basically this also is a visual representation of fear, because people retreat into the dollar when they are worried, when they think that their investment may not do well, so they just basically sell all the risky assets and hold the value in dollars. So when the dollar goes up, markedly like this, it means that the markets are fearful. Okay, and with good reason, by the way. This is a similar chart for the same, and just looking at 2022 now for the S&P 500. So as you can see, we have gone down quite significantly in this. Where did it start? It started up here. Okay, this is 2022. So it went down a maximum of about 25%, and at the moment we are at about 21.6% for the year. I mean, this is quite a big move for the share market, where average growth has been between 10 and 15% a year. So this is more than 1 year's worth of growth that we have already shed. So in a way, when you think about it, if you are invested in stocks and shares, the best strategy, unless you actually want to go into derivatives, the best strategy would have been to stay out of the market altogether. Okay, because then if you had a chunk of money down here on the 1st of January, and you didn't invest in any particular shares, but kept it in your bank account, then you would be, 20% richer than if you have invested in shares, funds, etc., etc. Because, all the funds will tell you is that, oh, look, we have beaten the market, and they've beaten the market maybe by 5%. So say our funds only went down 15% instead of 20%. Yay! Let's celebrate. Let's celebrate that. So that's the one thing. And this is instead the crypto market. So this is Bitcoin. Again, looking at the same period, obviously, this is seen as a risky asset. So it is expected in the same period as the market goes down, this share market, this will go down more. As you can see, we are now at 57%. went down as much as 62, and now we're sitting about 57. But the interesting thing is that it seems to have, whether the stock market it keeps going down at the moment. In this past couple of weeks, Bitcoin seems to have found a little bit of a bottom, and it has been trading in a range for the past 2 or 3 months. Now, the thing is, well, does that mean that this is the bottom for Bitcoin? Absolutely not, and nobody can actually say that. What we can do is now look at the general economic condition, and I'll show you a few graphs and talk about what they mean, and see what it is likely to happen, and even logically what is happening, in our environment, in our ecosystem, in companies that are operating in the US, and what it means for consumers. Okay, so let me see. Hopefully this will work. So let me. Can you see this new image? Yeah. Okay, this is one of the few what it is considered like forward-leading macro indicators. Okay, so these are the an index of new orders and inventories. Okay, and this is the year-on-year change. Okay, generally, what this does then gets followed in the next 9 to 12 months by the stock market. Okay, because basically this, the way that, it works like this. These are manufacturing companies. Okay, if they can't, they don't find a buyer for their products, what they do, obviously, manufacturing operations don't, they can be halted and restarted at the moment's notice. Okay, so when a certain production has been put in place, then it carries on producing for a number of weeks and months, and so it takes time before they actually take the decision to actually ramp up or slow down. Okay, so what happens is that when the buyers are not there anymore, companies build inventories. Okay, so instead of selling their products, they pile them up basically in the storage. But they get to a point where they have enough in storage, and then that affects the production itself. The production starts going down. Okay, so this is why this is important. By keeping an eye on the new orders and inventories, will tell us what then later would be the results when this company starts reporting. Okay, because it tells us that if they have more or less customers, and also how much stuff they are producing. Okay, because if the production slows down, then it means that also they will need less people. They will need to buy less prime materials from their suppliers, and so on. So the general economic growth will slow down. Okay, so this is pointing, and again, I don't want to scare you, but again, to another drop by the mid to the end of 2023, by another 10 to 15% drop. So this is what the numbers are really telling us. Okay, so and this is, as I say, an indicator that generally is being taken as a leading indicator. Most of the charting indicators that you might have seen or you might have been taught if you've done any technical analysis are generally lagging indicators. So tell you what happened in the past, but they don't tell you really what will happen in the future. Okay, this is kind of like the opposite. It's kind of like trying to tell you what the SPX behavior would be 12 months down the line. And we can see here in history, we're going from 2008 to our days. It's been fairly reliable in terms of predicting like a few months in advance what the movements in the stock market would be. Okay, so pay attention, please. Let's bring another one. And here we are seeing the credit impulse. Okay, so that means generally would consider it as money creation, because money gets created mostly not by physically printing notes, but by generating credit. Okay, and now we can see that here in after this, you can see this spike here. This is the money creation that happened during the beginning of the pandemic in 2020. So they got to a point where they have created all this money, and all this way, all up to beginning of 2021 was still pumping money into the economy, and only then from let's say the second quarter in 2021 onwards, they started slowly tightening the reins. That means raising interest rates again, and starting to do several operations in the bond market to basically reduce the money in circulation. Okay, and this is kind of interesting because, again, just logic would tell you that when there is less money in circulation, then obviously, generally speaking, people have got less money to spend. So then less money to buy products that the companies produce. So the results of the companies, generally there will be a reduction in trading. Okay, and so a worsening of the reported results. Okay, so this is interesting because this is what we're expecting for next year, kind of like a drop again of 10% plus in growth, but this is the expectation of the analysts, plus 8%. Okay, so if you listen to CNN, or the other Bloomberg or the other networks, will tell you that the market will grow next year. Again, the numbers are telling us something different. So it's up to you. It's up to you. I mean, you can find out these numbers, or you can just listen to the analysts. But again, what I'm trying to get to is that many people are thinking, is this the right time to go shopping for bargains? And this is maybe the most interesting graph of them all. Okay, so we are looking here of real rates. Okay, real rates are interest rates once you've taken away the effects of inflation. Okay, so it is generally, if we'll tell you what the cost is for somebody who wants the real cost. Okay, once you strip the inflation away, is of borrowing, or what the return is for somebody that supplies money, as a lender. And here, this is related to the equilibrium rates, okay, which is interest rates that allows the money supply, so the people that want money and the people that want to supply money, to be in equilibrium. Okay, so it's a rate-based thought where economy can grow at a reasonable pace, and inflation can be kept under control. Now we see that the times that this is represented by this yellow line. Okay, so the times when the real interest rates have gone above equilibrium rates, the real rates. Now this is meant a really tight Fed position. Okay, where the real of the market is being squeezed, and the money in circulation is being reduced quite visibly. Okay, now, and have a look at the size of this. Is what happened in 2000 with the dot-com boom and bust. This is the crisis of 2008, and look at what we're going through now. Okay, now this is the only anomaly is this one here. Okay, what we saw in 2018, 2019, but that really is because then they neutralized this by printing a lot of money, and you can see that then the policy following 2018 and 19 was to basically, if we are below zero, it means that we are in easing monetary policy, so creating again more money, just to make it easy to understand. And when we are above this, we are then tightening. Okay, so we are looking at a really strong tightening range that might last for a while longer. Okay, and here you can see as well that the price. So this is the price above about equilibrium rates, and we can see now we are at a higher level than we've ever been in the 3 previous crises. Okay, and this is what's happened in the past. So when we went through these crises that were not probably as deep as what we're going through now, the returns in the stock market on average were minus 25%, minus 30%. Okay, as we say, this 2018-19 was an anomaly because this was then basically they kicked the can down the road. So they printed a lot of money, so you didn't feel the effect of that crisis, but you're feeling them now. So instead of having, you know, a smaller crisis here, we're having a huge one here. Okay, and this last column. This is the credit spreads, which is the difference in high yielding bonds. So they are bonds in where a lot of interest is required because there is a real risk of default, and traditional bonds like gilts, like you know, just the what is considered very safe. Okay, and you can see during a crisis, this spreads gets really wide because, you know, the risky bonds are, you know, carry a real risk of not getting your capital back. Okay, so so this is what we are going to see. The average, without considering, because we still don't know what the effect will be in 2022, but the average was 18% decline in the stock market. And this is, you know, considering 18 and 19. So you can see the average of the previous two would be much higher than that. Okay, it would be at 27.5. So this is something that we can, in a way, look forward to, because again, this all the money. So guys, I just wanted to make you realize that all the money that was created in 2020 that were giving away like sweets, really, will need to be, in a way, paid for in economic terms. Okay, so whichever way this happens, you know, we will have to go through a period of, you know, discomfort. And how we navigate this period then will tell us how well we will do once this crisis is washed through. Okay, let's go back. Let's go back here. So the thing is this the best time to go shopping for stocks and shares at a cheap price? Absolutely not. Absolutely not. There is still a period to go through before the markets start getting a little bit of confidence back. And really, what we need to keep an eye on, and this is why sometimes, you know, when the Jerome Powell speaks, you know, even if there is nothing, no policy directly attached to it, everybody listens because they are looking at a time when the policy will get less aggressive. Because at the moment, what is coming out from his mouth and then from the Fed in general is that they will keep tightening monetary policy until the inflation is back at 2%, okay, which is not going to happen anytime soon. In the next few months, probably because they're tightening. At the moment in the US, we are 8.3%, so we might get in a few months to 4 or 5%, but it would take a lot of pain to get back to 2% inflation levels, okay? So it's at the moment is wait and see, but as we've seen before, as we discussed, there are things that, you know, they are brewing on the sideline, and one of these I wanted to show you is, for example, this is relation between US dollar and Japanese yen. I know, as you can see, in lately, so we're talking about the March 2022. If you just look at this sharp, and then we're not going right to the bottom, but just the last 6 months is gone up 26%. Now, again, guys, these are currencies, very strong currencies. 26% movement is, you know, in trading terms, absolutely amazing, you know, incredible. So can this carry on like this forever? No, obviously not. And then, you know, when we trade and we go back and see when was US dollar yen at this price level. Now this is starting to become interesting now, because now we are approaching a peak. Okay, so these are the two major peaks that they are close to the, you know, to where we are. And again, you know, when you're looking at trading, at charting, you try and go back in time until you find price that was at that level. So the strongest, just think about an elastic band, okay? The strongest trades are when the elastic band is stretched almost to breaking point, okay? And this is where it kind of like, in a way, eventually will snap back to go back to the mean. okay, to the average. And here, look at this when that was. I mean, this was 25 years ago, pretty much, in 1998. And the next peak, which is not that far away, I mean, this is, what's the level? High 147. So it's only two points away from where we are now. So this is very close. Okay, this is a little bit further away, about 160. Okay, but this is we're going back to 1990. So these are not things that happen every day. These are things that happen every, kind of like position like this, a potential reversal, kind of like generational trends. Okay, and we can see, we can see here we go even deeper, we go into a monthly chart. Okay, so we can see what the general trend has been for the Japanese yen. This starts in 1971. So the trend has been the Japanese yen has got stronger and stronger and stronger, and it's found kind of like around the 100 mark. Really, it's found an equilibrium over the past 25, 30 years. But it's not all of a sudden they're not going to start applying a policy of devaluing the yen all of a sudden. So this is likely to reverse, sometime soon. So these are the things that I would, keep in. I'm not a day trader, so I don't take trades every day, but I do look at things like this that are stretched. Okay, because these are kind of like the way they're considered like high probability positions. And you don't need to be in front of the screen every day, but just need to look at the chart and examine it for a while and thinking, okay, what would be a good, kind of like entry point for me. Okay, and this is obviously, this is a monthly chart. You'll need to go into much smaller time frames, like a daily chart, to start seeing, when it would be a good idea to engage. And you can see how much data there is. We're looking at you can even see, sorry. We can even see on this chart. We need to move it. We have to move it. So there we are. So this is where we are on a daily chart, okay? And when the things are this stretch, you don't even have to be that precise, as long as your account is not over leveraged, and with such big movements. Obviously, in trading, accounts in currency trading are normally leveraged, 50, 100, 200 times, but you don't need to trade at a very high leverage. You just trade small position. But this is some of the points where it would be interesting to engage. We already are at those levels where you could enter a trade at around, probably, if we want to go stretched. Let's have a look. 146 looks like a really good point, and we just like about 1 point away from there. And you would be taking a trade. Obviously, this is taking a trade. Would be selling the dollar against the yen. Okay, so sometimes it's painful because you think, well, the dollar is extremely strong right now, so am I taking a position against the yen? And those are the things that those are considerations that you need to take. But definitely, it's one pair and keeping a close eye on because it is so stretched. Okay, and because of what's happened the last time that we were at that point, that we measure it up. So the last time the price was at this level, and again, this is like in 5-6 months, he went down 26%. So even a small movement would be a hugely profitable trade, even if it doesn't go the whole way as it did in 1998. But there is a high probability that the yen would revalue over time. I mean, this is not a short-term trade, but something that you will keep for a few months. But there is a high potential that the yen would revalue over the dollar over that time. Now let's move on to, obviously, as everything, this is a crypto hour, so let's move on and talk about crypto. worrying thing that happened overnight was the Binance. So two things. First of all, the Binance Smart Chain got hacked, and it does say for about 100 million, but there are other reports that say there could be up to 500 million that have been compromised. Okay, so we don't know exactly the whole how much exactly was taken off chain, and if they managed to recycle this money and so make it disappear in a way. But obviously the Binance is at the moment the Binance Smart Chain is the third project in terms of market cap in crypto after Bitcoin and Ethereum. So it is very big. The other big thing is that, is the Smart Chain halted? Okay, so they stopped the project, and this is something that should worry you also, because it means that if anybody has got the power to actually stop a blockchain completely, it means that it's not decentralized. And this has been like the biggest criticism of the Binance Smart Chain from the beginning, is that there is only a small number of validators on the chain, and a little bit like Solana can be stopped and started at will. So potentially the reason for the growth of Bitcoin and Ethereum as well is that nobody could control the blockchain, but it is a community project now. If somebody has switched, even if it's in your interest in a way to stop these people running away with the money, it's still an existential problem for a decentralized project. Okay, it means that the level of decentralization is not that good, because it would be very difficult to make a decision to alter chain in a network like Bitcoin, for example, that is widely decentralized, and the same thing in Ethereum. Okay, so that should worry you for two different reasons. But this is a similar hack to what has happened already in other examples. So we'll see the similar hacks happen to the Harmony bridge and to the Ronin bridge, which is used by Axie Infinity. Okay, so although it's a different, technically it's slightly different, but it's the same type of hack. So they haven't hacked the protocol directly, but it's the bridge to where you hold tokens that don't really exist on your chain. Okay, but if people want to use Bitcoin, for example, on the Binance Smart Chain, they need to lock their Bitcoin into a bridge on the Bitcoin side, and then on the BNB side, these were minted a new token. Okay, so somewhere the actual token are being held in a vault. Okay, and that vault is the one that's being compromised, and where a lot of these funds are stolen. So the effect they can have, and we'll see then what happens in the next few days, is what will these tokens, how will these tokens be affected? Because if you say that there were a certain number of Bitcoin on the Binance Smart Chain, now if the Bitcoins that were in the vault have been stolen, what are the ones on the Binance Smart Chain worth? Is it somebody making sure that that peg, so the Bitcoin you have on the Binance Smart Chain, is still worth 1 Bitcoin or not? Because this is what happened in the Harmony bridge. Okay, so it's not just the bridge is being hacked, but the tokens on Harmony that represented Bitcoin, BNB, Ethereum, and so on have lost value, because their mirror is not there anymore. Okay, so it would be interesting to see what happens now to the to the other tokens on the bridge token on Binance. It's still very fresh, from a few hours ago, so we don't know exactly what's going to happen, but keep an eye open for news. Now, on a more positive vein, after all this doom and gloom, and there's kind of like a change in the behavior of Bitcoin and Tether whales. Say since in September, so the whales have been selling Bitcoin and holding Tether, and now we've seen a kind of like a reversal of this trend in the past couple of weeks. kind of like the Bitcoin accumulation level is going up again in terms of like big holders. You know, whales are people where there's a lot of Bitcoins on a single account, and the number of at the same point on the other side, on the Tether side, the whales are diminishing their position in Tether. So basically, they sell in Tether to buy back Bitcoin. Okay, and you know, I'm not saying that I know everything, because I don't. Sometimes you need to look at the behavior of people with deep pockets. Obviously, I've got a reason for doing certain things. So they are investing back into Bitcoin, and also they are taking the Bitcoins away from the exchanges. Okay, so when the coins are on exchanges, is because they want to trade them. Okay, when they want to keep them for safe storage, take them away from the storage into the cold wallet, into the cold wallets. Okay, so so this is encouraging to see that there is some support from from big holders' point of view for Bitcoin. This is the same. So it's the article where I got that that chart from. And another big player, Grayscale, has launched a new ETF that invests in Bitcoin miners. So again, there's a way, although it hasn't been approved in the US, they are launching in other countries, okay, from Europe, Canada, and so on. So it is interesting that although Bitcoin's price has been, it's been down for so long, still a lot of the big players are still interested and not just supporting buying Bitcoin for a quick gain, but also promoting investment in the infrastructure. Okay, because without miners there wouldn't be any Bitcoin. Okay, so it's interesting to see that they are not just seeing an opportunity, but also, they put in the, when a company like Grayscale launches something like this, they put in a good name to it as well. Okay, so they do believe in the that this would be not just a good investment for them, but be a good investment for their investors. Okay, so they could actually gain by investing in Bitcoin miners. Another good news for Bitcoin is the Lightning Network. Now, the Lightning Network, for those of you that maybe haven't heard of it before, it's a layer 2 scaling solution for Bitcoin. Okay, so it allows very fast transaction, very, very cheap. Okay, although there are some issues in terms of, so it's not as secure as the main Bitcoin network, but it allows Bitcoin to be used in the real world, to buy a coffee, to have a small value transaction of a few dollars that you couldn't do with the main network, because you couldn't buy a coffee when just a transaction will cost you $7 or $8, and you have to wait maybe half an hour for the confirmation. By then it will be cold, and there will be a queue, probably snaking around the block. Okay, so this is the interesting thing, is that the capacity, so this system has been proved to work, but the capacity was very small, so it hasn't been really used at scale. But now they increased the capacity to 5,000 Bitcoin, and also I think the biggest incentive to the growth of this market has been the adoption of Bitcoin as a legal tender in El Salvador, because Bitcoin has used this system to allow for small payments. The obstacle to the adoption has been that the Lightning Network is not accepted in most, is not integrated with most wallets. So you have to have a special wallet to hold your your Bitcoin in the Lightning Network. So it's not the easiest way of interacting, to have a to just say include it in a wallet where you hold most of your other coins already. But still, it is a solution, a partial solution that is starting to see adoption on the retailer side, on many different places. I mean, we've seen it also in Bahrain, where 5,000 shops now are taking Bitcoin at the point of sale. and in different places they are starting to to make their way into consumer applications now, where you can directly make small purchases with Bitcoin. Now, we get into the end of this, so another couple of news, and then we finish and we'll take a few questions. Now, another one of the big names in crypto, which is MakerDAO, which is the organization behind the DAI stablecoin, has now allocated 500 million. The DAI stablecoin, by the way, it's an algorithmic stablecoin. Okay, so it's not like Tether or USDC, where they just have dollars in a bank account to support the price, the peg of the dollar, but it's based on a basket of different cryptos and stable coins. Okay, so they are now decided to invest 500 million in US treasuries and corporate bonds. As we have seen, funny enough, from what we were discussing before, this is not a bad investment at the moment, because the dollar and bond yields at the moment are a way of investing in this sort of market. It's a way of defensive position, but they're finding a way of investing and making the reserves work and grow. Okay, so they're trying to basically give a little bit more stability to DAI as a stable coin, especially in a period where there is high fluctuations in the price of cryptos. So to give the investors, let's say, more trust in the DAI stable coins. And so the last two news is, again, one in terms of adoption. Colorado is now accepting crypto for tax payments. Okay, so we're making way now, not only in the real world with companies, but even with authorities. Some of them still consider the crypto is the devil, but some of them are starting to try and integrate it, because they can see that this is here to stay. So again, with these things, you need to go into the nitty-gritty actually and see into the details of how it works. But it's positive that there are forward-looking authorities that are now looking to interact with people holding crypto, and they're making it possible to do everything with it. Okay, and again, obviously, we couldn't stop without talking about Cardano. Now, this is kind of like it's still early days, because as we talked about the Basel hard fork, there was only recently activated, and it will take time for many dApps to be deploying on the blockchain. But looking at the very recent numbers, there's been a significant spike in new users in the Cardano dApps within the next few days, within the last 24 hours. Okay, so we're talking about 3 to 6% growth. There's only 23 dApps listed on dApp Radar, and they've seen a significant growth in this short time. So again, it's not. Don't use this as a metric to tell you, convince you one way or another, but simply sometimes you just have to look at the numbers and then think about later what are the numbers telling us, and I'm not quite sure. I mean, I haven't followed the people. I'm not sure if Jonathan is in the. Oh yes, I can see him. Jonathan, you can tell us Jonathan is, those of you that don't know him, he's a Cardano stake pool operator. So it is one of the people that actually handles the transaction that you put through in Cardano. So you can tell us a little bit maybe about volumes in recent days. Jonathan, if you can hear me. No, you can't hear me right now. Okay, fine. If you can hear me, then let me know, and just unmute yourself. So it is interesting to see to see an increased number of users. This is what everybody had been expecting after the Basel hard fork. Now, there's a bunch of dApps that haven't yet deployed on the blockchain. So this is not, again, when there is something like this, there is new functionality. It doesn't happen the day after like this, but a lot of these dApps will then deploy on the blockchain. That means new users being attracted to it, more traffic on the Cardano blockchain, and so on. So it's something that will grow over time, and now the functionality has been enabled for that to be possible. Okay, so I just bring this to your attention every week, and then you make of it what you want. If you listen to me and you haven't bought any Cardano, then I think, why are you listening to me at all? We're talking about this for 2 years, guys. By the way, so after this crypto hour, I say Jonathan runs a session on Cardano, specifically on Cardano on Discord. Again, if you can hear me, Jonathan, then post the link on the chat box, and it starts at 9:30. Okay. Now, okay, let me stop sharing now. I will start taking a few questions. Cornelia, do you want to elaborate a little bit on that? US bond would seem most risky investment at the moment. I mean, what kind of US bonds are you referring to?
I just picked up from this DAO DAI story that they are trying to increase trust in their system by adding some connection to the real value world in traditional bonds and things. That's one thing. For me, what I've picked up from the big economic news and big lines, I would not consider buying any bonds at the moment in any Western government, debt at the moment, because I think they are all unholdable and will be unsustainable and will need to be sort of played out altogether. So I'm sorry for my bit tired English at the moment. So this is, I don't understand how you could trust, increase trust by investing in something that I would consider quite the most risky at the moment in the whole world. Okay, basically, Cornelia, the DAI is, although it's an old algorithmic stablecoin, is pegged to the dollar. Okay, so in the end of the day, they have to hold dollars. So the reason why they're buying bonds is that because they are holding dollars, at least they're getting some interest back. Okay, otherwise they would just do so they think it's just they want to hold dollars, to just convincing the market that whatever happens to crypto is still going to be there. Okay, and while they're holding the dollars, so they are getting some interest back. So that's simple as that. Okay. Okay. No, the DAI is a stable coin, so then it was very. Thank you.
Yeah. No problem. Okay. Any questions coming from anybody?
Yeah, Luca, do you have to go to Binance now to see if everything's still there?
What, to the Binance? No, this is the Binance Smart Chain, not the Binance, exchange. It's okay. Two separate things. Okay. Completely separate things. Okay, so this is the Binance Smart Chain that's been hacked, and if it does affect, I mean, generally, I mean, in the past, I mean, I don't know. Obviously, the Binance Smart Chain is a slightly different case because they're a decentralized network, but at the same time, they're fairly centralized as a decentralized network, because generally, anybody could really start a Bitcoin a validator node, but only a small number of people can have a Binance node, and you need to have very powerful computers as well. So that's generally, when Binance was active in the past, they refunded all the investors that have been affected 100%, no question asked. And this is what I think gave Binance a lot of trust from investors generally to use them as an exchange. They're thinking, actually, yes, things happen and things will happen to everybody. Okay, so there will be all different projects that will be hacked on one stage or another, but it's how you deal with the things that happen to you that will determine how people will see you in the future. Now, what is going to happen now remains to be seen. First of all, I mean, we're still early days, so at the moment they are in the assessing stage. So let's see what really happened, and what are the funds that have been siphoned off from Binance Smart Chain, and see what the damage is. After that, they can then start thinking of are these funds recoverable? And sometimes they have been. Or if they're not recoverable, how they're going to deal with it, and especially what has been affected, because being a bridge, that's the worry, is for people that are holding bridged. So these are kind of like the wrapped tokens on Binance. So it will be wrapped Bitcoin, wrapped Ethereum, wrapped anything. So the tokens are not designed to be used on Binance, but they can be used on Binance because of a bridge. Okay, so that's the main worry would be, if you hold in those tokens, then what happens to them if some of the mirror images are being stolen? Okay, so we'll see. I mean, I'd say it's only this news is only a few hours old, so it's not even 24 hours. So we'll see what will happen in a few days. Okay. But it is worrying, because Binance Smart Chain is the third largest. If you take the stable coins away, Binance Smart Coin is the third crypto project in terms of market cap after Bitcoin and Ethereum. So it's really big news. Yeah. Okay. Any other question, guys? If we are quiet, I can see Jonathan now, so I can ask him a question. You went there before, Jonathan. Just remember to post the link to your session. And sorry, Helle, you're saying it's not the BNB token that we're talking about. Obviously, BNB token is the gas token for Binance Smart Chain. So if this is proved to be quite a large hack, it would be affected in some way. But it's more about the wrapped tokens in the bridge. Okay, so Ethereum, if you have Ethereum, maybe in DeFi, or Bitcoin in DeFi on maybe PancakeSwap or somewhere else where you're providing liquidity, that could be affected. Okay, that's the thing to worry about. Not so much a BNB token, obviously, when projects are affected, so the price will, people are worried and potentially would move away and they'll sell BNB and the price might go down. But it's more than that. Jonathan, we're discussing before, just read, I don't know if you heard me before, about the increased activity on Cardano. And there was an article that they were saying how the activity has spiked in the last 24 hours in all the apps they followed on that radar. So I don't know, are you found it from being actually on the seen on the network itself? As an operator?
I just tried to have a quick look to see any metrics, because I just couldn't tell. So yeah, I don't know. I imagine they're tracking and transaction volume, but the capacity is so good now on a chain, you don't really notice spikes or anything. Yeah, my charts say that my server loads haven't changed, so yeah, it's probably true, but yeah, it's just good news. And there's certainly been a lot of YouTube activity, people starting to post about the price predictions for Cardano now that before fork is so successful, and other changes.
Yeah, I think, and also I think that article was referring to the apps they are in that radar, and obviously only about 20 something apps are there. I think the main one was MintSwap. Apparently, has seen quite a surge. I don't know if they're doing something new, weren't doing before, but there seems quite a surge in activity.
They're not doing anything new. There was a good opportunity that was coming up. I don't know if you've heard of Clay Nation, which is one of the largest NFT projects on Cardano, and they've got Snoop Dogg and his son heavily involved as like flagship characters for it, and they were launching on MinSwap, using this new mechanism called the collective zapping. So as a way of raising liquidity rapidly for a new token, because they've got a NFT collection, they're also starting a metaverse, and so this token is going to be used in the metaverse, and they don't have massive liquidity, so they were generating that through a collective zapping on on MinSwap, which is where anybody who wants to sort of provide liquidity on the platform can collectively convert ADA into I don't even know what the token's called. Yes, Clay, to the Clay token, and that will sort of, over a period of time in a safe zone, and that will determine the base price for when the token launches on MinSwap. And so there's an extra bonus reward. So they'll be providing a liquidity pool and yield farming and so forth. So there may have been a rush to get in on that. However, at the last minute, there was a legal hiccup and they pulled it all away. So then maybe it was just people rushing to find out if it was launched yet or not. But
so double amount of transactions, people getting in and getting out. Okay. Interesting.
But saying that, there is launched on MuesliSwap, which is the first exchange that launched on Cardano, decentralized exchange. They now have the ability to do their normal order book model, but also automated market maker. So their AMM is launched as well. So now they're like a DEX aggregator, which is very cool, and was only possible with the features released in the Vassal hard fork. So
this is interesting because you get the criticism from the Ethereum world, something like this, and say things like, oh, look, the Vassal fork has happened, then oh yeah, your price has gone down, nothing is happening, whatever. But it's not like you switch something and just like the day after you all of a sudden you get 300 million transactions happening, or that weren't happening before. It is something that there are real people working on these projects that need to do their coding and need to make these features available on the blockchain. So if they are going to be, it's more like, rather than an avalanche, it's going to be like a trickle of new projects coming on that will then increase the amount of transactions and the volume transacted on the blockchain. No, it's not going to happen overnight. You're frozen, Jonathan, I think. So I don't know if you heard anything there, so because you were frozen on my screen. You were saying kind of the activity on Cardano, just simply because of the Vassal hard fork. Many of the criticism on the Ethereum world was like this happened and nothing has changed really. I'm saying it's not something that's going to happen overnight, because there's real people working behind these projects, and then it's going to be like a trickle rather than like an avalanche.
Flood, yeah. And it's the same we saw at the previous hard forks as well. There's the features released onto mainnet, but you've still got all your testing to do on mainnet, so you can launch and have it in a test environment, but you don't have the volume going through the pre-production or the preview test nets to actually know if your app is holding up at volume, is doing all the right things. So then it comes to Vassal hard fork launches, you then got access to mainnet information, so you launch your code, and then a while later you release your features on your dApps. So yeah, they'll all start, and they'll probably be coming faster and harder, because we've had smart contracts now for approaching a year. So that I think the ramp up will be faster, but yes, it's still not going to be overnight. It's going to be a few weeks of slow growth.
Amazing. Okay, guys. So I can take one last minute question, and then we'll close the call for today, for another week. So first of all, have you found the kind of like economic look into the market useful? Because it's something at the same time, I don't want to talk about things that you don't find interesting. So if it's something that you find interesting, then we can do more of it. or if you rather me concentrate just on crypto, then we can just forget about that and just look at crypto.
I think it's very important, so we really appreciate that.
Thank you very much, Shimin. And I'll try to, I like, because it's my interest as well, so I'll try to listen from different sources and then, kind of like condense them and bring it to you in a way that can make sense without being too complicated. So I'm really enjoying doing these Fridays, by the way, and this is why I carried on doing them now for almost, I'm coming, I think, to year and a half. Okay, so we'll see if I can make it to the 2-year mark. But at the moment, I've got no intention of stopping. Okay, so have a great weekend, everyone, and don't forget that we only kind of half an hour away, Jonathan, from your session. Okay, so the link is there. You can see in the chat box. I'll give you a few seconds just to make sure that if you want to attend, that you can click on the link. And I will see you again next week. Okay, so have a great weekend and see you all soon. Bye, everyone.